right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, this show, we're going to talk to you about what's happening in the markets and how we are trading it. And geez, everybody is waiting for the CPI data released tomorrow. So, yesterday, stocks finished quite mixed. Today, not a whole lot going on, but there is one thing that happened, and we'll talk about this. Anyhow, this is your first time here. I'm Markus Heitkoetter. This is my head coach, Mark Hodge, and we're real traders who trade live accounts. So therefore, we have a lot of trading experience, and we're showing you how we trade these crazy markets. So trust me, we know our stuff, and we're not afraid to tell you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And yeah, Mark, I mean, markets are just super quiet. Yesterday, kind of a surprise gain.
It it was an interesting day in that we had a nice drift higher after the lower start. So kicking off the day with the losses across the board and ended up mixed. So S&P finishing slightly higher. Dow was up a little bit. Well, I see that you're on a 5 minute chart on the S&P. We could stay there, just showing what took place.
Yeah. And yeah, that's exactly. So drifting higher on really no news because if we look at yesterday and the economic calendar, we don't have nothing. I mean, there was the final wholesale inventories, but yellow flag report. Then we have FOMC member Williams speaking yesterday, who interestingly enough said, well, you know what? The raising interest rates and the banking crisis have nothing to do with each other. And everybody thought, really? I think that was an interesting statement.
Yeah, I mean, there is a bit of a tie, but I think that the key takeaway is that we had one, event or situation, and then the Fed's long-term policy. But uh, yeah, I mean, it seemed like the markets didn't really care because everybody's focused on inflation right now, and two reports coming up.
That is where tomorrow we have the CPI report coming up. So, for the previous months, price increased by 0.4%. It is expected to increase by 0.2%. And therefore, inflation year over year to come down from 6% to 5.2%. And I mean, we talked about it this morning with our mastermind members. Since crude oil is a major factor in our energy costs here in CPI, we were looking at it of when crude oil started moving higher, and this was in the beginning of April. So, I mean, since crude oil was moving lower in March, and this is just part of the cost of the CPI, it could actually be that this, what traders are expecting, is coming true tomorrow.
I believe that to be true, Marcus. It makes sense that inflation is coming down based on what we see, based on the numbers, and based on energy costs, which we know are a certain part of that. And then maybe we get an increase if crude oil stays higher or continues to move higher in next CPI's reading.
Yeah, but I mean, 5.2% would be great. We're coming down from what, 8 point something percent. So, I mean, this is where we are moving in the right direction. However, right now, traders are expecting that the Fed will raise interest rates at the next meeting. So, right now, a 73% probability of another quarter percent hike. And this is basically based on the labor data that we saw last week because the jobs market seems to be still strong. The economy seems to be resilient.
That's it. And the economy being resilient, I think, is key because the Fed, their target has been above 5%. And one more rate hike puts them where they anticipated that they could be. Again, long term inflation targets would be 2% for the Fed, right? So
Right.
if we're at five and a quarter, five with when it comes to interest rates, that could help bring inflation down quicker. And if the economy can support that increase, that's exactly what the Fed wants to see. If there were big concerns about the economy or the jobs market was just getting crushed quickly, then they would definitely stay the same.
Yeah, and I mean this is where we had the banking crisis that occurred. If you look at a daily chart of the S&P, that occurred here around March 10th. This is when it all started, and this is where there were concerns. But right now, it seems that focus is back on inflation, and the big one definitely tomorrow, CPI. Now we also have PPI on Thursday. Well, what do you expect as a reaction there? I mean, I think tomorrow is the big one.
I agree. CPI is always going to be the bigger of the two, but PPI is a wild card, right? So if there's, the two together can tell a similar story, but if there's just a huge surprise, then you could definitely get some movement on PPI. But CPI out of the two is definitely more significant.
Yeah. And then we also have Friday. I mean, even Thursday, we have earnings season kicking off with Delta, but I think this time all eyes will be on banks, and they're kicking off on Friday before the bell with JP Morgan reporting, Citigroup reporting, Wells Fargo, PNC, BlackRock. I think this is where everybody wants to hear, okay, are we out of the banking crisis, or is this still a problem, especially in light of inflation data and the Fed possibly raising interest rates? This is where I think that, especially with JP Morgan, the CEO, Jamie Dimon, always has something to say. I mean, he's almost a little bit like Powell, right? When he speaks, people are listening, and the market is reacting to this.
Sure. And this is where there's kind of a double whammy on Friday with the banks kicking things off because, of course, earnings season is always a big deal for stocks. And so once a quarter, you're going to hear from them, and the focus being on revenue and earnings per share, but also future guidance. But here we have this banking crisis to digest as well. So I think that. Kicking things off with banks always significant, but a little more significance this time around for the reasons you mentioned.
Yeah. So before we look at our positions, looking at the markets today, super, super, super quiet. I mean, this morning we were looking at the markets with our mastermind members, and the S&P has moved in a 0.25% range, 0.25 ever since we opened. So a whole bunch of nothing here so far.
Exactly. And it's to be expected when you have some key reports coming up, but it really just looks like traders are sitting and waiting.
Yeah. Now, the one thing that really happened is Bitcoin. Bitcoin trading above 30,000. So tracking the 30,000 level, trading at levels that we haven't seen since June 2022. So not quite a year ago, but yeah, I mean, this has been before the collapse of FTX. So right now, there seems to be some more interested in cryptocurrencies.
Absolutely. So huge move coming off of the pullback that we saw earlier mid March from that almost 2,000 level, cracking 30,000, and that's significant. So traders, it seems like Bitcoin investors and traders anyway are thinking that maybe this Fed, aggressive hiking is coming to an end with just one more. Seems to do well in a risk on environment, and that's kind of what we've been seeing also with tech this year.
Yeah, and if you look here also at technicals, we see that ever since we had the golden cross, I mean, Bitcoin tested the 200-day moving average, but now both of them sloping up and higher. So we'll see what happens there. But yeah, since you mentioned tech, I mean, tech seems to be struggling right now, and
Pulling
this
back
where
a little bit. Yeah, today and
yeah,
yesterday.
I mean, these were today and yesterday, right? So this were we now have the heat map coming up in the next release. So if you have PowerX Optimizer, you don't have access to it just yet. We are hoping to release it next week, but just a preview. We see that Microsoft down 2.5%, Apple down, Google down, Amazon down, Nvidia down. So tech today definitely a little bit lower. Everything else seems to be rather green.
Looks decent and a little misleading because there isn't a whole lot of movement.
Yeah, that is true. Let's take a look at our positions and see what's happening there since we do have some tech stocks. But first, Coterra Energy, CTRA. So moving higher here today, up almost a percent, 0.9%. Trading right now at 25.88. I sold the 26 calls against my existing position. And if we are closing above 26 on Friday, I will get called away. Now, it's a little bit too early to tell what I will do, but I'm really leaning towards letting this one go, especially since we have upcoming earnings again in just under 3 weeks and 20 days from now on May 1st. And I mean, earnings are always a little bit of wild card. So I'm ready to move on from this one.
I support that decision. Of course, I let my shares go a little bit earlier on that last high. Hey, I timed it perfectly, but that was more luck than skill. I was ready to let things go. We saw that pullback. You got the dividend payment. We're drifting higher. But that's the thing. You could always reset. You could always look at a new opportunity if this pulls back and stays in the range rather than going through the ups and downs. And earnings are always a wild card. So,
Right.
it's an event, and it could be good, it could be bad. We just don't know, and you could get a reaction where the stock gaps up 5% or gaps down. The earnings analysis tool that we have gives us an idea of what's happened in the past, so it gives us a little more ammunition for our decision.
Yeah, but here we see that especially with CTR Ecotera Energy, it's kind of 50-50, right? I mean, half of the time they moved higher 7 days after reporting earnings, half of the time they moved lower. So therefore, sometimes it's a little bit more obvious what a stock does. But here, since it's a 50-50 chance, I'm ready to let this one go if there's an opportunity. So we'll definitely take a look at this. All right. Next on the list, Google. Last week, with the run up in Google, I sold the 110 calls. I got assigned at 108. So if we would trade above 110, I get called away. I make money, or I keep the premium. Plus, I make some money on the stock. Today, with some weakness in tech, Google down 1.3%. So there might be a possibility that I can buy back the calls that I sold earlier, and then on the next rally, do that again and keep collecting premium. My break even right now at 103.04. So I'm very happy with this position right now, trading above my break even, trading close to my assigned price, just $3 below. But again, $3 for Google, that's only a day's move because Google is moving a lot. There's lots of volatility in there.
Sure, and it looks like you might be able to get out at 90% max profit today, if not tomorrow, if that pullback continues. So might be a nice opportunity to reload, like you said.
Yeah. And then AMD, talk about reloading. I mean, you have been trading AMD and sold calls. You were looking at it yesterday because yesterday AMD had a great day, up 3.2%. So you were considering what the 102, 103 calls?
Sure, and this is where, with my original cost basis of 104, that's my goal, that's my target, the price level that I want to sell calls at. However, because I've been in this trade for so long, and there was a period where I wasn't able to bring in income by selling calls, I decided that I wanted to be a little more aggressive with where I would consider selling calls. And I was able to do that, collect about $3 in premium, bringing my break even down even more, which is great. However, I was, because I've been in the trade for a while, my cost basis being 104. I'm really looking at maybe the 102 to 104 range to sell calls. And yesterday, the 100 level was available at 30% annualized, which was decent, but not quite where I wanted to be at. I was hoping for a little more follow through this morning after a real nice day yesterday. Not the case so far. Opening higher and pulling right back. So down 2.5%. That just means I need to wait.
All right. Well, but again, tomorrow everything can change, right? So especially with
Sure.
right now, tech moving a little bit lower. So this is where it could be an explosive move tomorrow. We'll see what happens there. And then we have PNC Financial Services Group, still trading at the lower range here. We talked about it yesterday. Probably nothing happening here until they report earnings on Friday. So Friday will probably be the big move. This is where we could take a look at the earnings analysis, where we see that here, typically, they are moving higher on the seventh day after reporting earnings, 8 out of the last 12 quarters. So 67% of the time, they're moving higher. Hey, if they can do this on Friday, this would be great. And I think what traders and investors want to hear is, okay, how does this bank crisis affect you, if at all? And what is your response to this? What do you expect going forward? And this is where traders will be listening to the earnings call, not only what happened in the last quarter, but also the outlook moving forward.
Exactly. It looks like we found a little bit of a short term bottom here, holding up okay. But you're right. We need that earnings report to hopefully see more upside on this one. And the takeaway, at least based on what's happened in the past with earnings, is they have a tendency to beat expectations. The reaction tends to be negative, but then 7 days later, the follow through is positive. So
Right.
if that is the case here, I'd be happy with it.
Yeah. So with the markets diddling along, not a whole lot going on. So this is where we see no stocks meet the filter criteria. So you can change the filters, but I'm not really too interested in trading a whole bunch of nothing here. This is where it's important to be patient. We also see that the VIX, the fear index, is below 20 at lows here that, well, we haven't seen in a while. This is where we're trading below 20. So not a whole lot of premium there. So definitely worth waiting another day and seeing what happens tomorrow.
I agree. I'd say there's always three positions that you could take as a trader: being long the market, being short the market, and being on the sidelines or out of the market. And being out of the market is a position. So I do have some open positions, but I have buying power available that I would love to deploy. But for me, anyway, it doesn't make sense to force something going into some big reports that could move the market. And as a wheel trader, I'd really like to see a little downside to get that nice premium on selling those puts, and then see some buying after that.
Yeah, since we are already slinging one-liners here, another one that we like to use is in order to succeed in the markets, two conditions have to be met. You have to be ready, and the market has to be ready. We are ready to trade. We were ready to trade this morning. We were hanging out with our mastermind members looking at the markets. But right now, for our strategy, the markets are not ready. And therefore, it is sitting on our hands. And that's what we did. And so we might get some great opportunities tomorrow. So make sure that you tune in tomorrow. In the meantime, check out these videos that we have for you. They explain a little bit more of what we are doing, why we are doing this. If you enjoyed the show here today, give us a like, subscribe to it, and then you don't want to miss what happens tomorrow.
Happy trading, everybody.